Hi, this is David Adams with Trading Concepts Incorporated. I'm going to talk to you a little bit tonight about the average true range indicator. It's an indicator. It was originally part of that landmark book by Wells Wilder, written in 1979. It's been used for a variety of things, mostly wrong. I use it exclusively to set up my stops, and I can get a good idea as to the volatility of the market as I observe I observe the way the indicators working. Uh, this is a decision bar chart right here, and you can see it was a decent day. There's a bunch of entries and exits here. Not particularly interested in that today. But right down here at the bottom, just kind of crawling along, is the average true range indicator, and you can see it varies wildly as as the volatility increases and decreases throughout the course of the day. It reached an apex right as the afternoon session started. It was at 1.2. I usually use in normal market conditions, and you kind of gotta exclude the opening, because it'll cause the average true rate indicator to look real wild because of the wild activity that goes on. But once the market settles down, it becomes pretty reliable. Again, I'll use 2.5 or 3 times the average true range to set up my stops. Why? Well, that's telling me the average range of the market right now, and it's going to give me a pretty good indication of what, if I'm in the right trade and on the right side of the right trade, the potential profit that this trade could produce. That's at least theoretically. Now, obviously, if you get into a market that begins to trend, you're going to let your trade run a little bit, but it gives you a good idea as to the real potential that every trade has. You can see as the day went on, it was kind of one of those typical afternoons where the market just fell into a chop, and you can see the average true range indicator fell mostly below 1, and that would be a pretty good indication that the potential for a good trade, at least that day, in the afternoon session, was probably not real good. I don't recommend using the average true range indicator for anything else. People do. But for me, I find I can set very accurate stops, and more than anything, I find that it maximizes the profitability of every potential trade that I have. Obviously, you have to be thinking on your feet, and if you get a market trending one way or the other, you'll have to react accordingly. But it gives you the best chance to maximize the profit in every trade. Again, this is Dave Adams with Trading Concepts. I got a little aside for you today, and that is love for you to write to your congressman. There's a horrible bill, and I mean horrible, that is designed to set up a tax on most securities transactions. It would cost all of us a lot of money, and potentially put some businesses out of business. The bill is a result of kind of the market-induced recession that we've just gone through, and I think the more congressmen hear from guys like us, the less likely they are to vote for it. Again, I encourage you to write your congressman, tell them it's a crummy bill and they need to get on the ball. You all have a great day, and we're getting towards the holidays, so I wish you all happy holidays and Merry Christmas. Best of luck in your trading, and stay on the right side of the trade. Bye-bye.